You're listening to the Best Advice Podcast, guys. If you haven't already, give us a 5-star review and help spread the word. And if you have a question for the guys, email a voice recording to podcast@bestadvicepodcastguys.com. That's podcast@bestadvicepodcastguys.com. Today's episode is brought to you by Security Financial Management. If you're ready to level up your financial game, SFM offers a free initial consultation after each episode. Just send an email to podcast@bestadvicepodcastguys.com with the subject line complimentary consultation to book yours today.
Welcome back to Best Advice Podcast, guys. I'm your host, Rob Lavalio, here as always with Austin Thatch Jacks, Frank Lavalio, and Dave Allen. Gentlemen, what's crack-a-lack?
Easy, big fella.
I mean, it's all good, right, Austin Jacks?
All good, baby.
How about you, Dave? You feel good about crack-a-lacking?
I'm so good.
But let's get into it. We like to start each episode with the powerful practice of positive thinking. We call this Give Me Something Good. Dave, give me something good.
Hey, give me something good.
All right, everybody out there, I'm not an Instagrammer. I'm not a Facebook guy. I'm just not. People in my family are, and some friends are. So occasionally I get some cool stuff that's sent to me. It's not original, but it kind of hit me right in the heart. So there was this actor, and I'm not going to say the name. Maybe you guys may have seen the clip. Famous actor that was going to NYU. And his professor came to him. He was in the acting class, and his professor came to him and said, "Let's go have a beer. We need to talk." So he's pretty excited about it. And he goes to have a beer with his professor, and his professor says, "Hey, I just want to let you know, I do not think that you're cut out for this business, and I think you need to look at other career opportunities." So he kind of took it, and you probably exited the room pretty sad and said, "Heck with that, I'm going in." About 15 years later, after a red carpet event, he's sitting over there with all his famous actor buddies, and he sees his professor in the same restaurant as him, and he waves him over. So you'd think he's going to take this opportunity to embarrass him and to say, "Hey, look at me." No, but what he did, he introduced him to his buddies and saying, "Hey, guys, I want to let you know, this is the only professor that has ever bought me a beer." So moral of that story is, silent success is deafening. Isn't, guys, from the standpoint of thinking about that, isn't your favorite client as an advisor the one that walks in, that's very humble, finances does not, Frank, you just dropped?
Yeah, I dropped a pen, but
think
I'm
you
going
dropped-
right on.
I think you dropped the
You
mic.
got it. They just keep going, man. Drop a pen.
He
You're
looks
in the
straight ahead.
Show goes on.
Show goes on. Pen drop, no big deal.
But
I do. I
But let me
totally
tell you, your
agree.
favorite client, my favorite client is the one that walks in very humble. Money does not define them. It made their life better. But you all know money doesn't make you happy. You got to be a happy person, and money makes it better. But it's not the only thing that defines
Sure.
your life. I mean, it is very important. I mean, it's the engine, it's the gas that makes your engine run. But that's my favorite person. That's not the first word out of their mouth. It's like, "Hey, did you know that my portfolio is up to such and such?" Or, "Hey, I just bought this new big house," or, "I got these 3 fancy new cars." I mean, if they've got them in their garage, that's nice, but I don't really care.
No, I
You know?
totally agree. And to add to your,
That's cool.
it's funny. Your story resonated with me because I read something on Tom Brady just 2 nights ago. I didn't know you were going to do that opening because it was your turn, and we let you run it, and you did a good job. But Tom Brady on the combine, they had this cool thing I saw, and it said, scouting report, too slow, too skinny, weak arm, can't run, bad out of the pocket. And he read that, like, I don't know, a couple months ago, and he said, I would take that out before any big game, and I would look at it and say, can't run, too slow, bad arm. And he goes, my whole thing for the rest of my career was to show everybody silently, you guys missed me. Because he was, what, a 5th round or 6th round pick?
Fifth or sixth,
Six.
Yeah.
Very
Now
cool.
he's, maybe the GOAT, greatest ever. And he reads, so that's what drives you, right? He's like, yeah, I'll watch slow, yeah, watch. And he is slow. But he just, but he's awesome.
Fast arm. Probably had
Anyway.
that taped in his locker.
Yeah, just he read it every day.
Shout out Stuart Silverman. He gave us that quote when we were on the bus. He said, "You don't have to look like you win. You just have to win."
That's right.
So
that's
silence is powerful, man.
That's right.
Like
It
no
is.
answer is an answer.
That's exactly right. Exactly right.
All right, let's get on to the question of today. Today's question comes from Kevin from Winter Park. Kevin, what you got for us?
You want to say something?
Hey guys, Kevin from Winter Park says recently I've become aware that mutual funds will pass on capital gains as distributions to shareholders, and I'm concerned about taxable events occurring if I'm already down in the market. In terms of financial planning, should I be worried about these taxable events, and are there any strategies for predicting when these distributions will be happening and what the capital gains will possibly look like?
All right, Kevin, thank you. Fats, take this one over, big dog. Woof, woof.
Give me a bark
Roof,
first.
roof. Woof. So, Kevin, basically what happens with mutual funds, oftentimes what they'll do is what's called a capital gains distribution, meaning they pass on some of the taxable gains within the underlying fund, even though you may not have sold that fund. So a mutual fund is a pool of different investors which invests in stocks, bonds, etc. So if the underlying positions within the fund are sold, the mutual fund will pass that along to the shareholders pro rata, proportionate to what they own of the fund. So even though you may not have sold shares of the fund, the underlying positions within the fund which were sold can create what's called a capital gains distribution.
And that can be frustrating for investors, right? Because you could even have a tough year, right? So inside a mutual fund, there's a lot of buying and selling during the year. And for investors, they could, let's make it easy, you put $100,000 in, and you know it's a tough year, say 2022, when everything was kind of falling apart, tough year, and it's worth 95, and you're like, I'm down $5,000, you know, that's no fun. But wait a minute, I got a $2,000 1099, so it adds insult to injury a bit. So it's a little frustrating for investors, but that's what's going on internally.
Let me add, and what even makes it more frustrating, it typically happens more when you got volatile markets,
Right.
because managers are trading.
Yeah, they're
people
trading.
are some people need their cash and it's being pulled out at capital gains or losses, and it tends to be, it feels more insulting when you're down and you get a big hit,
Right.
as opposed to, you know, if it doesn't feel too bad when you're up 10 or 15%,
Oh, yeah.
and then you get that, okay, yeah, I made some money this
If
year.
it's 100 goes to 120 and you got to pay $2,000 or tax, I'm 118 net. I
Exactly.
feel pretty good, but when the antithesis happens, it's no fun. Right, Austin Jacks?
Absolutely. That sucks, Frank.
If it currently happens like through volatile times, right? Can you offset that if you're like winning and losing throughout the year? Or does
tax
it have to be?
harvest, yeah.
You could do tax harvesting, but another strategy is that mutual fund companies give you an estimate. I mean, you got to really look for it, but there's an estimate that comes out. These typically happen around the end of the year, around end of November. But somewhere around September, they put their estimate of what they think it's going to be. And if you sold your fund before that time, you do not get hit with it. That doesn't mean go sell all your stuff if there's a capital gains coming. But let's say you have a dog in your portfolio, not a real dog, roof, roof.
Dog.
A dog.
I'm the dog.
Mutual
Dog is bad.
Dog is bad.
Dog is good.
Is a cat good?
Not in this scenario.
Fats is a cat guy.
That's a big cat.
I've never seen a
Big
more
cat.
athletic person, a big D1 athletic person be a cat guy. But Austin's a cat
Hey,
guy.
I like them all.
Yeah,
baby.
you like kitties?
Let's get a quick summary here, Dave. We kind of summarized this answer for Kevin.
Okay, well, first off, mutual funds are a wonderful investment, so we don't want to bash those. But when portfolios get larger, you know, let's say you got, $500,000 or $1 million and you're all in mutual funds, there might be alternative strategies. And I'm talking in non-IRA accounts. This is not happening in your IRA. This is happening in a non-qualified account, your trust account or your individual name or a joint account. Many people have found that exchange-traded fund portfolios, which are basically the indexes, and there are some ETFs now that are what they call them smart ETFs that might have a strategy to them as addition to the index. You can build a portfolio of those, and those do not have the phantom capital gains, because when you own an ETF, you actually own it. It's not a pooled account. Or you can have a portfolio of stocks that we utilize, and I'll let Frank explain that, a little bit of institutional money managers. An institutional money manager typically owns individual stocks, bonds, and ETFs, and those can be very tax efficient. In addition, those managers are also doing a little tax harvesting inside of there. So if there's a gain to offset a loss, their attempt is to do that as well. So, a good strategy using an ETF model portfolio or a model with institutional managers has been something that we do here at Security Financial.
Mitch is not with us today, so we're going to leave you guys there. Remember, folks, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.